Hey traders, welcome. So another way of us filtering our trades. Remember, we're using a filter to try and reduce the amount of losing trades. It's never going to be perfect, but if we know, for example, that we're doing something wrong, and very often the common theme of those losing trades is that this is kind of present in the market, whether that's range, whether that's volume, whether that's something or other, then let's eliminate that. Okay, we're going to eliminate some winning trades, but all we're doing is cutting off some of the waste that we don't want. So we looked at range. Now let's have a look at something else, and that is volume. It seems very obvious, doesn't it? We're looking at volume. Most of us look at volume. Most of us look at price. Some of us use different indicators and what have you. But this is going back to the very raw basics here. Let me just take off the VWAPs here so we're clouding our. This is US Steel. Code is X. So again, just picking a pretty much a random stock. I'll pick a UK stock in a moment. We can look at it. A good way from a day trader's perspective, and we'll look at swing trading in a moment, but from a day trader's perspective, a good way of telling you whether you want to get involved in that stock or in that market during the day is just to look at the volume. Now you might say, yeah, well, how do I look at the volume? A good idea is to say, listen, what is the volume like in the first 15 minutes? And actually today, X flagged up on my radar because I've been watching it for a while. Let's just put a bit of black background here. It's one of those stocks that's just ramped up from the Trump win, has come off again. It's been reasonably, news driven and very, very active. They had bad earnings that caused them to go lower. It's, trapped a lot of people. Whatever that is, doesn't really matter. Let's have a look at it. So it's on my radar. Look at it volume. From a volume perspective. So today it flags up because not only has it got a gap up, and again we'll talk about price as a kind of filter if you like, but also volume. So even if it hasn't gapped up, the fact that it's done the most volume in the first 15 minutes that it has done for, I'm scrolling back and I'm seeing at least a couple of weeks worth of data here, that to me makes it worth trading. From a day trader's perspective, it means it's worth trading. And also from a swing trader's perspective too, if you're wanting to trade X and you've got it down on your pad from the, you want to get involved in it from the long side, you're waiting for some sort of reason to get involved. Perhaps you've got a price point you want to get involved in, a key level, a catalyst. Volume might be that catalyst. You might well say to yourself, hey, you know what, I want to get short X, I want to get long X, whatever that may be. I've done my analysis, done my due diligence, everything. What I'm waiting for now is some sort of thing to give it a shove. The volume on the first 15 minutes might be something that makes you say, hey, you know what, people are getting involved in it. Now's my time to jump on. I'm not getting involved in chop, I'm getting involved. But also from a day trading perspective, if you're looking for volatility, let's say you're looking to fade momentum or get involved in momentum, follow momentum, whatever it may be, and that's all we're doing as day traders, looking for that stretch point where we're going to get involved, or the compression for the re-expansion. You need the volume. The volume has got to expand and contract with the way you're trading. So using a filter and saying, hey, there's a good first 15-minute volume. I want to get involved in it. I can see it. Now I know that people are interested in it. Let's look at another example. Something like Facebook. Today, decent 15-minute volume. Again, a nice push up. It looks a lot better. I'd probably want to get involved in it. It's a decent high level. Everyone's reasonably happy. Let's look at something like the German DAX. Pretty quiet. In fact, we need to go to 8 o'clock, don't we? Pretty quiet. There's the first 50 minutes. Nowhere near as active as it was the day before that. Nowhere near, in fact, less than it was there. It's pretty low. So if I was watching this, I was looking at the first 15-minute volume on the DAX. I'd be pretty disappointed. I'd say to myself, listen, no one's really getting involved in it. No participants are eager. No one's, really wanting to execute quickly, which is where our edge is as day traders. If someone's really active and really kind of not price sensitive anymore and they're executing early in the first 15 minutes, that's when we can take advantage of it, whether we're riding the coattails, whether we're waiting for them to kind of spit it out and get it all done and it comes back to a mean, then that's what we're looking for. Let's have a look at something else, like let's have a look at Tesco's, for example. Tesco's a bit of a steady Eddie kind of stock when it loads up, but it's got a bit of a news issue at the moment. I think I might have loaded up the wrong thing there. When it loads, we shall see. That's better. That makes more sense. Okay, so Tesco's, when it loads up the volume, we can see what's going on. So if we're going, let's say we were trading Tesco's in the first 15 minutes and we wanted to see exactly what was happening, then we could do, if we had volume, we could do. Here it is. Finally got it in. Obviously, I don't bring up Tesco's very much on my chart, as you can see. So again, same kind of thing. Let's have a look. Volume pretty low, middle of nowhere, nothing's going on. But on this one example, I would notice the volume at the end of the day was quite high. That's something else to look at. The volume at the end of the day is quite high. So I might say, hey, volume at the end of the day on my basket of stocks, what's flagged up as a decent closing volume? Oh, this is good. I might then look at that at the open of the next day, knowing there's a supply-demand imbalance potentially that I want to get involved in. So let's have a look at it from a swing trading perspective. Let's go back to something that I know I've got plenty of... I've loaded up plenty of times, and it's probably pulling from my computer's cache as opposed to reloading it in. You know, Apple, let's have a look on a daily chart. So it's a good way as well as filtering for news. So rather than waiting all the time and looking when there's any news or any earnings or anything, if you've just got a volume filter that says, listen, when there's a spike in volume, I want to get involved, you're definitely going to be involved in earnings, you're definitely going to be involved in news, you're definitely going to be involved in gaps. So just looking at that from a perspective of a broad filter, and actually what it also does, which is another key good thing, is that even if there is a big gap, or even if there is some news, or even if there is some, if there are earnings, if there's no volume accompanying it, then no one is surprised by it. You're not going to get the reprice, you're not going to get the opportunity. So it's using the volume as a key way of filtering out trades. So how would you use it as a filter? You'd say to yourself, listen, I don't want to get involved in something that is volume in the lower half of what it normally does in what I'm in the time frame I'm looking at. So let me explain. If you're looking at a year and the volume for that day or for that week is in the lower half of what it normally does in the year, don't get involved in it. If you're looking at it from a from a 1 minute chart, you're looking at it from a day and the volume is in the lower half of what it normally does in the day, so here way in the lower half, don't get involved in it. It's a good way, a very simple, not something fancy here, it's just a very good, easy, simple way of saying, listen, I only want to get involved when other people are getting involved, and when other people are getting involved, volume is going to be high. So let me filter, let me use some kind of boundary, let me frame my trade a little bit and only really get involved in that, because I know from experience, I'm talking for you by the way here, you know from experience and I know from experience that when you get involved, especially as a day trader, maybe as a swing trader you're slightly different because you're looking for perhaps price as opposed to volatility. But anyway, if you're looking for momentum, you're still looking for this. And I know that when it's quiet out there and it's slow and it's sluggish, you tend to take trades you don't really want to take. You tend to want to have action. You tend to want to get involved. You tend to try and make setups out of something that is just not there. So an easy way to do it is just have that filter in place. It's a hard filter. Those are the rules. You do it. You don't get involved. But when it's above that, then you can start looking and you can start putting the trading strategies in place for that particular stock, commodity, currency pair, whatever it may be.